Wall Street is never truly new. Whatever is happening in the market now has happened before and will happen again because human nature never changes. Welcome to the Wisdom of Wealth channel today. Let's explore the investment philosophy of Jesse Livermore, the most legendary figure on Wall Street. At age 14, he entered the stock market with just $5. 38 years later, he had accumulated $100 million, some equal to 1/42nd of the U.S. annual tax revenue at the time. Even President Woodrow Wilson personally invited him for a meeting. As the top short seller in the market, Livermore's actions once forced J.P. Morgan to personally ask him to stop attacking the market. In 1919, Naimi was named the greatest investor of the century by the New York Times, beating even Warren Buffett. Although Livermore ended his life in poverty and called himself a failure, his precise trading techniques, money management systems, and revolutionary market strategies are still widely used today. His quotes, "We gain profound insight into both market mechanics and human nature while also learning from the lessons of his downfall to better guide our own lives." Let's listen.
Top steer speculators are always patient, waiting for the market to validate their judgment. Remember, the key to making real money lies not in frequent trading, but in patient waiting. Speculation is the most fascinating game on earth, but it's not for the foolish, the lazy minded, the emotionally unstable, or those obsessed with overnight riches. Such people are doomed to lose everything. Don't trust hearsay or insider tips. Do your homework, understand the fundamentals, and focus only on facts. The biggest enemy of investors and speculators is human nature. In the market, there are no bulls or bears, only those who are right. I often say, the easiest way to trade is to follow the trend buy in a bull market, short in a bear market. The key isn't catching tops or bottoms, but timing. When prices fall, I short. When they rise, I go long. Most people don't care whether it's a bull or bear market. They just want someone to tell them what to buy or sell. They dream of easy money without effort. Frequent trading is the game of losers. Imagine a merchant opening a new shop. He wouldn't expect a 25% return in the first year, but speculators demand at least 100% gains. They don't treat speculation as a serious business. It's fine to predict mentally, but never act until the market confirms your view. Only then should you risk your capital. In a year, there are only a few truly good opportunities, maybe 4 or 5. Until those arise, wait. Let others' mistakes pave the way for your gains. Many traders have felt that hopeful market moment only to miss the subtle warning signals inside. The sensitivity comes only from years of experience. I always wait for key points before entering a trade. Once the point comes, I act decisively, and that's how I consistently profit. Trades must begin at the early stages of a trend. If not, there's little profit to gain. Focus on the leading stocks in strong sectors. If you can't profit from leaders, you won't profit from the market. Short-term trading often causes you to miss big moves. In long-term trading, patience is more important than knowledge, though both are essential. Every trade must start with the question, is this the best possible time to enter? A skilled trader can identify key price points and understand why prices behave as they do. Don't sell at $50 just because you bought at $10. Ask whether it could reach $150. After doubling your capital, take half the profit aside. I've benefited from this principle even though I didn't always follow it as I should have. Never average down a loss. That's a rule to live by. Day traders are laying the groundwork for your big win. Recognize trends and ride the wave. Rome wasn't built in a day. Major trends take time. The final 48 hours often matter the most. Respect the trend more than the stock. Profits take care of themselves. Losses never do. Stick to strong sectors and leading stocks. Focus. If a key price is broken and the market doesn't act as expected, it's a danger signal. When opportunity comes and risk is acceptable, act without fear. My biggest wins come not from impulse, but from calm observation and timing. There's no magic to trading, just like billiards. It's about setting up your next move in advance. I created trust funds for my wife and son not out of fear of the market, but because I knew people spend all the money they can easily touch. I wanted my family secure regardless of my trades. Those who seek overnight wealth can never wait. Even when luck favors them, they rush to cash in and often end up broke. Years of dedication to one craft creates a mindset that separates professionals from amateurs. That mindset is what determines success in speculation. If a stock doesn't act as planned, exit. Don't argue with the market. Always stay alert. Once a market breaks its resistance and shows direction, that's your green light to enter. Never try to sell at the very top. That's a fool's game. Profit by judgment, not by selling opinions. When prices barely move, predicting is meaningless. Wait for a real breakout. It took me years to learn this simple truth. Never bet on short minus term swings. Look to the trend. Professionals care more about being right than about profits. If a stock behaves erratically, stay away. Without a diagnosis, there's no forecast. And no profit? Keep your head clear. Finance is about profits. Follow the crowd and you'll lose. You don't have to catch every wave. Just laugh last and loudest.